Hello everyone, and welcome back to another video on how to do a cost of supply study. This video is going to focus on the financial inputs section, and that section is split into two parts. There's financial inputs year 0 and financial inputs years 1 to 4. So basically what the financial inputs are the expenses and revenues that come from the audited financials that are represented on the D form, and they cover all of those expenses and revenues that aren't directly related to the sale or purchase of electricity. So examples might be, and you can see over here, there's a few of them: salaries and allowances, materials and supplies on the expenses side. And then on the revenue side, some examples could be reconnection fees, new connections, and then there's other kinds of revenue as well. So how this sheet works is in column H, these are the names of the different expenses or revenues. So you can see these match the D form, and I've got an example D form that I'll show you in a second. You can also add new categories if you do have some that are different, also down here and down here as well. Then column I is where you put in the actual values, and we'll go back to that in a second when I do an example for you. Column J is set at the default of 100% electricity supply share. If there's a case where maybe another municipal department also shares the expense, maybe it's a vehicle maintenance and that vehicle is used for the water department as well, maybe you can split the cost. For the most part, this will be at 100%. These two columns here allow you to split the cost between the wires side of the business and the retail side of the business. So the default, as you can see here, will be salaries and allowances will be 100% wires side of the business, but salaries and allowances that are excluding repairs and maintenance will be 100% retail side of the business. Payments to consultants in this example is split 50-50. As a municipality, you can decide how to split these based on your unique circumstances. Once you've done that, you'll have to allocate a function, and we've discussed functions in a previous video, but you allocate a function to each expense or revenue. So in this case, you can see we've got a few options, but we've chosen that salaries and allowances is network repairs and maintenance. If you decide to split it 50-50, you'll see that you get two functions to choose from. And again, you can select whatever there might be. In this case, we've chosen OPEX. Generally speaking, these expenses and revenues that have come from the D form, they are pre-populated and you won't need to change those unless there is a clear and obvious reason to change that. Say payments to consultants is only on the retail side, for example, then you would maybe just make this 0% like that. It's also important to delete that if you do that, but I'm going to leave that for now. Okay, so now I've showed you how the setup works. We can begin populating it with some example data. So where this comes from is from the D forms. And if you go to this tab, the statement of financial performance, this is where we get all of the data for the financial inputs. You can see that there's a revenue side and an expenses side. There's also 2 years here. There's the actual year and the budget year. These are important because if we go back to the tool, you can see in this case, we're doing year 0 and later on we'll do years 1 to 4. Those actual and budget years from the D form correspond with years 0 and years 1. So when we're doing financial input year 0, we are taking from column I here, which is the actual. So 23, 24 in our example. Another thing to look out for in both cases, the top table in the expenses and the revenue shows revenue from the sale of electricity to customers, and then the expenses of purchasing energy. When purchasing energy from Eskom, we don't add that to the financial inputs because that's dealt with on a separate tab, and I'll cover that in a separate video. So this won't be included here. Same with the revenue from selling to customers. That's dealt with in a separate tab, and we'll also do a video on that. So end user sales. However, this self-generation over here, that is something we would need to include. So if you go down to the bottom here, you'll see in row 97, there's non-Eskom purchase inputs. If you've procured power from a source that isn't Eskom, you can put it in here. So in our example, we've got self-generation of 2 million, and that links over here. Once you've done that, and in most cases you won't have that situation, usually municipalities just buy from Eskom. Once you've done that, you can get into the more common kinds of expenses. You'll recognize salaries and allowances, materials and supplies, contracted services. All of these have already been pre-populated into the tool, so you can just take those across. I'll show you an example here. So I've already done the first one, but what I can do is copy that and then paste the value in here like that. And you do that for all your different expenses, and you work your way down. So all of these things, NMD, exceedance, everything. Once you get to the bottom here, you'll see that sometimes there are general expenses that aren't listed on the tool. What you can do is lump them all into one category called general expenses. Or if you want, you can add them individually, operating leases, operational costs, and then you put those in. Once you've done that, you'll go back to the revenue side over here. And as I mentioned before, we won't be dealing with this table or this table in the financial inputs. This we deal with in a separate part of the tool. We mainly focus on other income. So you'll recognize reconnection fees, new connections from the tool over here in the revenues. The one thing that we must take note of is the free basic electricity. There's a separate tab where we put this information in. So if we go to the tool and you search for free basic or FBE inputs, this is where you put your free basic electricity share in. So if we go back to the D form, you'll see row 73 here. What we do is we take the budget amount, so year one, take that amount there, we go back to the tool and we paste it in here for year one, 24-25. We don't worry about year zero's FBE. If you don't know what the year two value will be, you can just copy the year one across for now. It gives a fairly accurate representation of what the FBE will be like. Then you go back to financial input year zero, and you can add any of these that you want, these other revenues. You paste the names in here, put the values in, assign the wires or retail share, allocate them functions, and then you'll be done with the inputs of year zero. The workflow that I like to use is moving straight from the financial inputs year zero to financial inputs years 1 to 4, so that you have the continuity using that D form. So you'll recognize all of the same categories that have come from financial inputs year zero. They've pulled through onto this sheet, as well as the year zero values that you inputted previously. Now what we need to do is input the year one estimates. So if you go back to D form, year one would be any of these columns that say budget and then 24, 25 in our example. So in this example here, let's say I take materials and supplies, I take year two, I copy it, I go here, and I paste it like that. That's how you do year one. If you want to do year two increase, you can do it as a percentage. So in the index tables, you're able to toggle this. You can make it either a rand value or a percentage, and that's covered in the video on how to use the index tables. But in this case, you can add a percent like that, and based on what your financial department has suggested, and you can increase the escalations as you see fit. So once you've put your increase in, it's important to come down to the bottom here, and you look in this row 180. These are the increases that Eskom will be given by NERSA. So if they choose to increase their tariffs by 12.7% for year 2, that's where you need to fill it in over here. So you come down, put in the Eskom increase here, and make sure that it is correct. Because say if you previously had 10% in here, the tool is going to assume that the costs of electricity aren't increasing as much as they are in reality, and that will throw out the results of your study. Just make sure to put the Eskom increase that is awarded in there at the end. Once you've done that, you've completed the financial input step, and you can move on to the next step.